Founded in Denver, Colorado in 1980 is hydrocarbon exploration company called Whiting Petroleum. In the last 40 years, Whiting made its money in oil production, exploration, as well as real estate. From 2005 to 2015, the company was super successful, making billions in net revenue before heading into some trouble in finances. However, it got back on its footing in 2020. But how though? That's what we'll be exploring in today's video.
Welcome to Financial Market TV. If you're new to the channel and enjoy content like this, hit that subscribe button and the notification bell. Also, please don't hesitate to share your comments down below and give this video a like. Let's get started.
Actually, when the lockdown in the Saudi-Russian oil war significantly cut oil demand around the globe, oil prices deflated across the globe, which made loads of large oil companies crawl to the brink of bankruptcy. Due to that, the Whiting Petroleum Company suddenly claimed a $3 billion loss thus far in 2020. The 5-month downturn mixed with billions of dollars of compiled debt in the last couple of years forced the company to declare the infamous Chapter 11 bankruptcy. What is Chapter 11 bankruptcy? Well, to summarize, it involves courts and banks renegotiating the terms of the debt of a company, involving forcing a company to fire a big part of its workforce and even selling off assets that can help the company survive in the short term. As most people might expect when a company goes bankrupt and might be forced to lay off many of its employees that make between $50,000 and $100,000 a year, that the company would hold tight every dollar that they have in order to keep the business afloat. This way, they can attempt being bailed out by the banks and the public taxpayers. In the case of Whiting, however, the exact opposite occurred because Whiting's top executives were given bonuses of just under $3 million each, literally right before the company went bankrupt. People want to generally invest in keeping their high-ranking executives in the same place because they know the essentials in running the company. Plus, hiring new executives could hurt the company and prevent it from removing itself from a poor economic situation in the shortest amount of time. Why they give out these bonuses right before the company goes bankrupt? Well, the courts have more say into how much compensation an executive can receive, or if they even should receive anything. Essentially, these bonuses are a way to circumvent bankruptcy laws and prevent the company from losing its executives who essentially were part of leadership that brought the company's bankruptcy in the limelight. Sadly, when these companies face bankruptcy, thousands of people are fired. Meanwhile, loads of executives are getting actual bonuses. And this really puts a spotlight on the truth that workers get paid more when the stock goes up, paid less when the stock goes down, laid off when bankruptcy occurs, while the executives thrive. Like in the fateful year of 2008, after the bank bailouts, roughly $30 billion of taxpayer money, which is largely from the middle class, went mainly to executive bonuses right at those Wall Street banks. Like AIG, for example, gave roughly $1.6 billion to executives after receiving its bailout money. And just to put that into perspective, the entire federal tax payment of 4.3 million average American households in 2009 went mainly to executive bonuses in these corporations. Did I mention that the '09 bailout money was largely taxpayer money? Nowadays, however, bankruptcies and executive compensation isn't coming directly from public funds, but that doesn't mean we aren't seeing something similar now. In the year 2020 alone, we witnessed hundreds of millions of dollars being sent out to executives just a few weeks before their companies declare bankruptcy. Super fishy? I think so. The bad news doesn't stop there. Executive compensation isn't the only way that large corporations and executives are raking in cash, like the $650 billion Paycheck Protection Program, for example. The PPP, also known as, was supposed to be an opportunity for small businesses to receive up to $10 million on a 2-year, 1% interest rate. On top of that, this loan would be forgivable, meaning that the principal would have to be paid back. At the agreement that employees kept their jobs, also at least 60% of these funds went to the employees, with the majority of remaining funds used for things like utilities for the company. So the PPP was pretty much a bailout that was mainly used for small businesses of the main street, not the Wall Street big boys. Yet we have seen so far that some giant corporations are finding loopholes in this program. You get a disproportionate amount of government money even if they don't need it. I mean, almost immediately after the PPP began to be distributed, large corporations like the Los Angeles Lakers tried to get this loan. And then there are other companies like VIBRA Healthcare who have over 9,000 employees and made over $1 billion last year alone, who were successfully able to receive $97 million from the Paycheck Protection Program. How did they do this? Well, by having 23 smaller LLCs that were able to act as if they weren't a large company, even if they were essentially just a branch of this billion-dollar corporation. However, there are some gray areas for this program. For example, it is a commonplace for a franchisee of, let's say, Papa John's to have a majority stake. That means that even though this one Papa John's is initially part of a parent company, it's a separate entity on its own, with little to no daily financial dealings with the parent company. But what if the parent company of Papa John's owns like a 50% stake in one location? Does that mean that the one location is under ownership of the billion-dollar business? Or is it still a small business owned by the franchisee? As you can see, that's the gray area. And there should definitely be some serious questions about how this money is being distributed. Some areas of California, for example, only had a PPP approval rate of about 25% in the first round of those loans. Depending on location, the approval rating could be as high as 90%, like some parts of Alabama, meaning it is very possible for large corporations to have taken out a loan that could have gone out to potentially other smaller companies that actually needed it. We'd just like to mention that most of the millions of businesses that receive the PPP loans used it for its actual intended purposes, and generally were SMEs that did use it for their payroll, but we all know that how many other companies don't in fact need this. Up till now, this method is still being used. Oh, and did we talk about the controversy of the thousands of churches that don't pay taxes but take between 1 to 3 billion worth of PPP loans? How ironic is that? Now, when we talk about airlines, it's understandable that they would bail out of the airlines since it doesn't feel right for the government to cut down an entire industry's revenue by 95% without expecting a kind of financial assistance for the company at least. It's not popular news just how these airline companies were unprepared for the economic downturn recently. American Airlines had done very well as a company over the past decade since 2012 and has brought in an operating income of over $25 billion. But sadly, right before the pandemic, they only had a few $1 billion. That seems like a lot, but for a huge airline company, that's mere pocket change. Meaning that if their year was anything like 2008, then they likely would not have been able to survive without filing for bankruptcy or receiving a bailout. And all this means is that most airlines have the opportunity to prepare for a downturn in the economy, but instead, they spend roughly half of their profits during the good times of the past 12 years. On $12 billion worth of stock buybacks, we can claim that American Airlines was definitely one of the worst offenders. The fact that an airline could have an additional $12 billion to cash in and aid in preparation for any economic downturn decided to buy back their own stock instead? Oof. Since we've now put this all under a spotlight with how these top-ranking execs receive compensation right before bankruptcies, how large corporations are somehow getting millions of dollars each, and how some corporations were financially irresponsible yet are getting bailed out again and again by the taxpayer, aka us, yet they don't actually need it. I want to know your thoughts on this.
Thanks for watching the whole video. Again, if you're new and like this type of content, subscribe to our channel. And don't forget to leave a comment down below and hit that like button. Also, click on the notification bell to get updated on our weekly uploads. See you in the next video.